What if a single prediction could turn a relatively small amount of money into hundreds of thousands of dollars, and at the same time raise serious questions about how modern markets work? That's exactly what happened recently on a crypto-based prediction platform, where one anonymous account drew global attention after making a highly profitable and extremely well-timed trade. According to publicly available data, a user on the prediction market Polymarket placed roughly $32,000 on outcomes related to political developments in Venezuela. Shortly afterward, news emerged of an operation involving the removal of Venezuelan President Nicolás Maduro. As those events unfolded, the value of the contracts held by that account surged dramatically. When the market settled, the account had earned profits estimated at more than $400,000. The timing of the trades quickly became a topic of discussion, especially within financial and crypto communities. Soon after the outcome became public, the Polymarket page associated with the account stopped being accessible. Attempts to visit it resulted in an error message, while other user accounts on the platform continued to function normally. This disappearance added another layer of intrigue to an already unusual situation. Prediction markets like Polymarket allow users to trade on the probability of real-world events. Participants buy and sell contracts based on whether they believe a specific outcome will happen. Prices move as expectations change, and when the event is resolved, winning positions are paid out. Supporters of prediction markets argue that they can efficiently aggregate information from many participants and sometimes forecast outcomes more accurately than traditional polls or expert opinions. Critics, however, point out that these platforms often operate in regulatory gray areas, especially when trades involve sensitive political or geopolitical events. In this case, what caught attention was not just the size of the profit, but how close the trades were placed to the moment when news of the operation became public. Some observers questioned whether the trader may have had access to information that was not yet widely available. In traditional financial markets, trading based on non-public information is tightly regulated and, in many cases, illegal. However, prediction markets are a newer category, and rules around them are still evolving. While regulators do oversee these platforms, the boundaries between speculation, forecasting, and misuse of information are not always clearly defined. This incident has renewed debate about whether prediction markets should be governed more like traditional financial exchanges, especially as they grow in size and influence. Some policymakers have suggested that clearer rules may be needed to ensure fairness and maintain public trust. Others argue that unusual wins, even very large ones, are an inherent part of speculative markets. They point out that prediction markets involve risk, and for every big winner, there are many participants who lose money when their expectations turn out to be wrong. Another aspect of the story is transparency. Because Polymarket operates using blockchain technology, transactions are publicly visible. Anyone can see when trades are made and how much money is involved. However, wallet addresses are typically anonymous, making it difficult to know who is behind a particular trade or what information they may have had. This mix of transparency and anonymity is one of the defining features of crypto-based markets. It allows open access and public verification of transactions, but it also complicates efforts to determine intent or responsibility when questions arise. Beyond the platform itself, the event highlights how closely financial activity has become linked to real-world developments. Political events, military actions, and policy decisions can now have immediate and measurable effects on digital markets that operate around the clock. For investors and market participants, the key takeaway is that new financial tools often move faster than the rules designed to govern them. As technology enables new ways to trade on information, regulators are left to consider how best to balance innovation with fairness and stability. For now, the disappearance of the Polymarket account remains unexplained. There has been no public confirmation of whether the account was removed, restricted, or simply made private. The platform has not issued a detailed statement addressing the specific case. What is clear is that this episode has intensified discussion around prediction markets, insider knowledge, and the future of regulation in crypto-enabled finance. As these platforms continue to grow and attract more participants, similar cases may emerge, prompting further scrutiny from regulators, lawmakers, and the public. In a world where information moves instantly and markets react just as fast, the line between prediction and advantage can be difficult to define. And as this case shows, sometimes a single trade is enough to spark a much larger conversation about how modern financial systems should work.